Let's take a little bit of a deeper dive into Ethereum and the potential of an ETH ETF. Will this potentially help what we're seeing? And that is a market correction happening right now. We'll take a look deep. My name is Paul Barron. Welcome back into Tech Path. All right, before we get started, I want to thank our sponsor, and that is Tangem. If you guys are looking at self-custody, and you should be, in getting your tokens off exchanges and onto your own self-custody hardware wallet. This is one of them that you can use. Just go over there and click the Get Tangem button up there in the top right. That's going to take you over to the 3-card set. That's the one I would get because it gives you that extra one to kind of work with. And this works in tandem with a super slick app, so it's very easy to use and, of course, fairly inexpensive too. So if you're brand new to self-custody, this will be a good start for you. Just use our link down below, helps the channel out. A couple of things have been happening, and everybody's asking, is the ETH ETF coming? Are we going to see a cycle here? Is this going to help us maybe recover into the summer from what we're seeing right now? Well, spot Ether ETF now have an 85% chance of being approved in May. Now, granted, this is coming from, guess what? My betting edge. Yeah, this is right. We're seeing probabilities percentages now coming into the betting cycle. So you could bet on this as well as a soccer game. But the point is that they have 85% probability. With that being the case, you have to remember that Fidelity, which we've often said on this channel, is an ETH Maxi secretly. I think they are into Ethereum. We've shown this many times on Fidelity Digital Assets, some of their strategies, a lot of their podcasts. You can kind of catch the whiff that there is a little bit of belief in Ethereum. And they have done something, and that is they've refiled, or not filed, but made an amendment to their ETF offering. So in this document, according to the registration statement, sponsors from time to time may stake a portion of the fund's assets through one or more staking providers, which may include affiliate or sponsor staking providers in consideration for any staking activity which the fund may engage. The fund would receive certain network rewards of Ether tokens, which may be treated as income to the fund as compensation for the services provided. So there's some interesting changes happening around Ethereum. Because remember, yield has been one of the big factors that is a differentiator between the Bitcoin ETF and the ETH potential ETF that's coming. A couple other things to hit on was this tweet right here. Fidelity proposes ETH ETF amendment for staking, aiming to boost investor income pending SEC approval. Guess what? Lido would be one of the big ones because this sees a little bit of a spike in terms of some acceptance in there. Lido might be a little bit of a buy right now because there's no real price action changing up. This is on the 1 day from this news coming in. So maybe people aren't realizing what's maybe afoot right now in terms of staking. I want to go over to a clip real quick. This was James Seyffart on our show talking about the ETF for Ethereum. Listen in.
The amount of time you need to interact with these issuers in the SEC to get these documents lined up for Ethereum should be less than Bitcoin. That said, like I said, we're at 69 days now. They started 91 days out, at least, probably more 100 plus days out on the Bitcoin side of things. So, and we're not hearing any indications of that changing, but that could change. The minute we see amendments that are indicative of the SEC having conversations, our odds are almost certainly going to have to flip beyond 50%, but we're not seeing any indication of that right now. I do think, I'm fairly confident that if we do see these spot Ethereum ETFs approved this year, May 23rd, or in 2025, they won't have staking. They will not be able to stake. The SEC does not like staking. We saw that with the Kraken situation. We see that now with Coinbase and others. So they're not a fan.
All right, so we've had James on several times, and he and I kind of joust back and forth about this topic, the staking advantage of what Ethereum brings to the market, who and if that could potentially happen. But really, it boils down to Gary Gensler. And you have to think about where Gensler has come from. And he has been talking about this for a long time. Listen into this clip right here.
In the crypto markets, there are various ways to validate data stored on crypto ledgers called blockchains. And one of these ways is called staking. Investors lock up their tokens in escrow and help validate the next block of data. Some stakers are then rewarded with new tokens. Staking, though, can be complicated and time-consuming and can take big upfront commitments of tokens. Thus, crypto entrepreneurs started offering what's called staking as a service. If you transfer your tokens to a staking as a service provider, they take control, possibly pooling your tokens with thousands or millions of others while promoting returns. That means you, the investor, should receive important disclosures. What do they actually do with your tokens? Are they really staking them? Are they lending, borrowing, or trading with them? Are they commingling them with their other businesses? Where do the rewards come from? Are you getting your fair share? There's currently no reliable way as an investor to know the answers to these important questions. Plus, when you sign on the dotted line or accept the terms of service, you are generally agreeing that placing your tokens with these providers may mean transferring your ownership to them. There's an expression in crypto, not your keys, not your crypto.
So when you think about, I mean, because Gensler is actually right there throughout that whole thing. And that is a concern, I think, especially as we see Wall Street flowing into this. So if the SEC is not necessarily concerned with staking, they're more concerned with the processes that involve staking and what that means, meaning they don't like the middlemen. Well, these ETFs are going to be middlemen. This was a tweet out there. Gensler and SEC aren't looking to ban all staking, but rather want to increase the fiduciary responsibility of centralized entities. I think that's normal SEC process, and it really is what the SEC is designed for, is to protect investors through regulatory guidance. That's not necessarily kind of stopping it, but keeping it in the guardrails, so to speak. So it's kind of interesting to see what is happening with Fidelity, what potentially will happen with GBDC, and also with BlackRock. I want to go to another clip here. This gets into Gary talking about, I shouldn't say Gary, Mr. Gensler talking about ETH again. Listen in.
My analysis, and many other people's, but my sort of rendition of the difference between Ethereum and Bitcoin, but the mythology around Vitalik Buterin might not be as great as Satoshi Nakamoto, but a 19-year-old journalist who was writing about Bitcoin said, we can build something on top of it using Nick Szabo's thoughts about smart contracts. He made it Turing complete. It's highly flexible. And thus, it's account-based rather than transaction-based. There was a vulnerability in attack vectors that he made it account-based. It's not identical, but for the purposes of design features, it has cryptographic hashes, timestamps, block headers, Merkle trees, though Ethereum has more than one Merkle tree and Bitcoin has one. They run about 14 seconds a block instead of 10 minutes. It's programmed in such a way that you can't use ASICs. Purposely, sort of, it makes it that mining is more decentralized and you don't have the big factories. I'm more into democratizing capital markets, so probably my biases would be to the ones that have multi-language potential, but I can't say for sure whether they'll necessarily win because there are some trade-offs.
That's what's ironic here is this is Gensler over at MIT prior to his stint at the SEC. And he was teaching about this. And he also talks a little bit further in. So in reality, when you think about this, is Gensler secretly an ETH Maxi? This is another video clip on hard forks and what Gensler thought about that. Listen in.
So the core developers of any coin can propose to the various mining and nodes to make a change. Even in Bitcoin, the monetary policy could change if there was a proposal from the core developers. There's some talk that Ether will move to proof of stake. The core developers have said we should bring down the inflation rate. Like there's an active advocacy to bring down the inflation rate. So you vote
by updating your node software, or?
Yes, in essence, and it could lead to a hard fork. Ethereum Classic is there because there was a hard fork off of Ethereum.
So, I mean, he predicted exactly what happened, and that was going from, you know, proof of work versus down to proof of stake. So there are some interesting things here. He also talked further in this same clip string about ETH as a security. Listen in.
Vitalik wanted to raise money. They put 9.5% in a foundation called the Ethereum Foundation, and the other 80% was sold to the public for $18 million. We'll talk later in the semester as to whether that was really a securities offering. I've publicly said I think so. But that was in 2014, and in 2018, the Securities and Exchange Commission has said, regardless of what it might have been in 14, it's now sufficiently decentralized that we'll consider it not a security.
So kind of back to the point that he's talked about often is that ETH, not a security. Now, there are some applications and some utility that he kind of alludes to, and there were some things that had to happen for this. And the reason I'm playing all these clips is to kind of set you up, because I think there is something coming down the pipe here from the SEC. Let's take a look at this clip on gaming.
There was 12 use cases that the Digital Chamber of Commerce came up with, and we're going to study most of these, not all of these, later in the semester. This is a list that I pulled off the internet yesterday, similar to your reading. These are the actual dApps that are working the highest. Gaming, CryptoKitties, that some of you might know, had 418 users. These are not economy-wise use case. You know, these you would see numbers that were hundreds of thousands.
All right, so his concern there wasn't a lot of adoption. Now, obviously, things have changed. And you look at number 3, God's Unchained right now, active users all-time high, 175K. Active daily users now around 10K. And you can kind of look at blockchain gaming now as a whole, hitting 1 million daily active unique wallets. So that has reached a level in which I think even he would look at it and say, all right, this is now a utility use case that's definitely here. The potential is starting to flow into it. Here was a tweet, of course, on Heroes of Mavia. They, of course, have now reached 3 million downloads across both iOS and Android. So this is not going away. This is definitely one that we've talked about many times, is that gaming will be kind of the arc or narrative that most likely will be the winner for this bull run. I still believe that, even though there's a lot of AI buzz and there's a lot of, you know, real world asset tokenization, all that, those kind of things. I think those are still very early. Another point that it kind of hits on here, this is games by blockchain. So again, this is all Ethereum right here, kind of moving down. But the point is that we're continuing to see massive growth in this category. And this is going to be one of the, I think, success stories for Ethereum going forward. I want to kind of also just jump into this because this is kind of interesting. You know, this, of course, is talking about Mr. Buterin, who says he created Ethereum because of Warcraft. This was always meant to be a gaming chain. Now, granted, Avalanche has done a lot in the way of subnets and recruiting devs and creating a whole enterprise around gaming, and that still may be one of the big rivals for Ethereum, but this is definitely one to pay attention to. Active addresses continue to climb here on Ethereum, and you can kind of see it's still moving up, around 500,000 right there on Ethereum March 18th. And then if you look at Polygon, absolutely exploding, over 1 million active addresses on Polygon, still one of the betters, even as we start to see a lot of projects that have started to exit Polygon for other reasons, not necessarily because of the chain. Real world assets also still continuing to climb, so this isn't necessarily going anywhere. So we'll continue to see RWAs become a bigger fabric of the institutional capital side of things. Again, blockchain based, and the future of where most of this is going. And then, of course, you have BlackRock. This was a story back in January, but he was talking about it then, you know, that crypto ETFs are a stepping stone into tokenization. This means, and especially now with the Bitcoin ETF being so successful, that the markets are ready. They're primed. The technology is in place. Now it's a matter of whether or not the lawmakers are truly there. All of that kind of plays into it. So a couple of things have been happening out here. This, of course, is kind of interesting because you've got a couple of senators, Jack Reed and LaFonza Butler, who came in and basically authored this. And you have to remember, these senators have not been in the discussion of crypto at all in the last year. We all know who the players are. These, I think, are basically out trying to get a little bit of crypto, you know, coverage, a little bit of spin off the crypto space of what they're doing here, which is trying to slow down the SEC from, of course, approving an Ethereum ETF. Further into this, Grayscale may make new moves that could corner the SEC on Ethereum spot ETFs. This is what they did with the Bitcoin ETF, all right? And it pushed them into a position where they lost their case. And of course, what do we have today? Biggest ETF maybe ever in the history of Wall Street. Could this be happening with the ETH ETF? Remember, these attorneys don't like losing, and you definitely don't want those stains on your record. So that could be a big factor here as Grayscale continues to move in. All right, so in this tweet right here from McHenry, you'll notice here that the judge basically sanctioned the SEC in the debt box case that was imposing, basically acting in bad faith. So these overreach issues that the SEC has been involved in here in the last couple of years, finally a judge is in position now saying, yeah, that's going to be the case, and here you go. Of course, Patrick McHenry is going out and asking, hey, Gensler requested more funding. This was all back, we covered this on, if you haven't seen a lot of our regulatory videos, go to our playlist down there, because this is, if you want to get a full education on what's happening in Capitol Hill, they do a good job. But they SEC requested more funding for enforcement last year. Now a judge calls out the SEC's abusive and deceptive legal practices. This must end. Then this is going to get back to, do we see a subpoena going into the SEC for these kind of actions? So it'll be one to kind of keep an eye on for sure. All right, further in there, in that same tweet, you see a lot of people kind of asking about, hey, we just got to get the subpoena done. When are you going to do it? A lot of talk, not a lot of action. I'm just going to send another letter. I think Congress is either going to make it happen in these kind of scenarios, or they're going to continue to, unfortunately, look like buffoons and letting the SEC kind of run the road. We actually did a video on this topic a few months ago, and it was talking about what this might look like. Listen in.
If I were to purchase a tokenized Pokemon card on a digital exchange via a blockchain, is that a security transaction?
I'd have to know more.
Do you think Bitcoin is a security?
No, I think I've said this in the past, that I think that it doesn't
I'm asking
meet the
to
Howey
answer
test.
my question now. This is not supposed to be hard. Your unresponsiveness is non-compliance, and we'll have to take action if you're not willing to comply. And we intend to get your compliance. We can do it the easy way or the hard way.
I think we've come to this crossroad where subpoenas may be necessary. And so with that, Mr. Chairman, you have my full support as when and if you decide to move forward. But
I don't want to use the compulsory process for the first time in our history. So I think it's would be a purposeful act on your part if it resulted in us issuing a subpoena.
All right, so as you can see, there's a lot of working parts here to come up to whether the SEC just says, hey, yeah, we're going to have an ETH ETF and off we go to the races. You've got the regulatory pressure. You've got the issues that have kind of rolled out with Gensler's own words. You've got the moves that guys like Fidelity, most likely BlackRock, and Grayscale all making in the background. And at some point, we're going to end up with some sort of legal action if we have to. And I think that is the situation. Now, that doesn't mean that an ETH ETF gets approved in May, for sure, but we're going to see it. All right, if you guys are not part of the Diamond Circle, make sure and get in. It's a great place to get additional content. And we like to go live here, so if you like live streams, let us know down in the comments. I'd love to get your feedback. And make sure and like this video, because this is going to be one of those things that helps others learn a little bit more about really what's happening in the marketplace, because right now it is a chess match. A lot happening. If you guys want to catch me out there on X, it's @PaulBaron. Catch you next time right here on TechPath.